Hello everyone, welcome to my channel HD ORION. We are studying accountancy for class 12th from T.S. Grewal's textbook. Chapter 1, Accounting for Partnership Firms Fundamentals. And in this video, we will study interest on loan by partner to the firm. So let us see some questions from the textbook. Interest on loan by partners to the firm, question number 6. So there are circumstances in which a partner gives loan to the firm, and as per partnership deed, the recommended interest is paid. But if interest is not suggested in partnership deed, then Indian Partnership Act 1932's provisions are applicable. In that case, 6% per annum interest is to be provided on such loans. So let us see some questions. Question number 6. X and Y are partners sharing profits and losses in the ratio of 2:3 with capitals of rupees 2 lakh and rupees 3 lakh respectively. On 1st October 2022, X and Y gave loans of rupees 80,000 and rupees 40,000 respectively to the firm. Show distribution of profits or losses for the year ended 31st March 2023 in each of the following alternative cases. Now, case 1, if the profit before interest for the year amounted to rupees 21,000. Case 2, if the profit before interest for the year amounted to rupees 3,000. Case 3, if the profit before interest for the year amounted to rupees 5,000. And case 4, if the losses before interest for the year amounted to rupees 14,000. So these are the 4 circumstances, and we have to show how we have to pay interest on loan provided by a partner. So for this, first we will calculate interest on loan. So interest on loan is provided on 1st October 2022. Fine. And there are two partners, X and Y. X has provided a loan of rupees 80,000 to the firm, and Y has provided a loan of rupees 40,000 on the same date. And interest is how much? Interest, because there is no partnership deed, and as a result the provisions of the act suggest that 6% per annum interest is to be provided. So interest is equal to how much? Interest is equal to, for X loan on rupees 80,000, 6% will be, but we have to calculate from the date they have provided the loan, that is from 1st of October. So October, November, December, January, February, March, for 6 months we will provide. And on Y also on rupees 40,000 at the rate of 6% per annum, here also for 6 months. So X should receive rupees 2,400 as interest and Y rupees 1,200 as interest. So total interest is equal to rupees 2,400 plus rupees 1,200, that is equal to rupees 3,600. So we will see distribution of profit for case 1 if the profit before interest for the year amounted to rupees 21,000. So because interest on loan is a charge against profit, and therefore this 21,000 cannot be considered as net profit because interest on loan has not been deducted from it. Fine. And therefore, so profit is rupees 21,000, and we will subtract interest on loan. Interest on loan is how much? 3,600. So when we deduct it, then we will get pure profit to be distributed to the partners. It is 17,400 rupees. So this profit will be given to partners X and Y in their profit sharing ratio, which is 2:3. So X will get how much? So x is to y is equal to 2 is to 3. So x will get out of 17,400, x will get 2 by 5. Whereas y will get out of 17,400, 3 by 5. And the amounts are rupees 6,960. And for y, the final profit is how much? 10,440. So this is the appropriation of profit to them after interest on loan is paid. Now let us discuss case 2. If the profit before interest for the year amounted to rupees 3,000. In that case also we have to give full interest on loan to the partners irrespective of profit or loss, because interest on loan is a charge against profit. So profit is how much? Profit is rupees 3,000. In this we will subtract interest on loan. Interest on loan, as we have earlier calculated, it is rupees 3,600. So when we subtract this, we get a loss minus 6,000, which is a loss. So this loss will be given to the partners. Fine. Of course, they also will be receiving interest on capital. That is for for X it is rupees 2,400 and Y it is 1,200 rupees. So this is also going to partners X and Y, but not in the form of distribution of profit, but as a charge against profit. So this 600 when we give to partners in the ratio 2 is to 3, X will get out of this 600, 2 by 5 portion will go to X, and Y out of this rupees 600, 3 by 5 portion will go to partner Y. And the amount is rupees 240 and rupees 360. Both are losses, because it is a charge against profit, and as a result we have to pay it compulsorily. We should not wait that if there is sufficient profit then only we will provide interest on loan. That is not true. Irrespective of profit or loss, we have to give 100% interest on loan to the partners, because it is a charge against profit. Now case 3. If the profit before interest for the year amounted to rupees 5,000. Here also 100% interest on loan is to be provided to the partners. So what is the amount of profit? Profits are rupees 5,000, and we have to subtract from it, because it is a charge against profit, interest on loan. For both the partners it is 3,600 rupees. So here profits are sufficient. You see, full interest on loan can be adjusted against profit, and we are left with 1,400 rupees. When we subtract here, we get 1,400 rupees as profit. This profit will be paid to the partners in their profit sharing ratio as an appropriation of profit to them. So we know X is to Y is equal to 2 is to 3. That is the suggested profit sharing ratio between the partners in the partnership deed. So this 1,400 rupees for X, how much? 1,400 rupees. Out of 1,400 rupees, 2 by 5 will go to X, and to Y. Out of 1,400 rupees, 3 by 5 will go to Y. And the amount is rupees 560 for X and rupees 840 for Y. Now let us see case 4. If the loss before interest for the year amounted to rupees 1,400. Now here is a loss. So irrespective of whether it is profit or loss, we have to pay 100% interest on loan. So loss for the year is how much? 1,400. And to this loss, because it is a loss, we have to add interest on loan. Fine. So interest on loan, as we have calculated for both X and Y partners, is rupees 3,600. So total loss after interest on loan is rupees 5,000. Fine. Because we have taken loss and therefore we are adding to adding interest on loan to loss, if we take it as profit in the in minus form, then profit can be represented as minus 1400. To this we can further decrease 3600, so now it will come minus 5000. So when we say minus, then it is already a loss, but we are taking it as a positive figure, stating it as loss and further adding interest on loan. So either way you can understand. Fine. In both the cases the results are same. Now x is to y is equal to 2 is to 3. So out of total loss of rupees 5000, x will get 2 by 5. That is equal to rupees 2000. And y will get rupees 3000. Both are losses. So let us see question number 7. Sita and Geeta are partners in a firm sharing profits in the ratio of 3:2. They had given loan to the firm of rupees 30,000 in their profit sharing ratio. So what is the profit sharing ratio? 3:2. This 30,000 is both by Sita and Geeta in the ratio 3:2 on 1st October 2022. So in the middle of the year, they have provided a total loan of rupees 30,000 in their profit sharing ratio to the firm. The partnership deed is silent on interest on loans from partners. Now, there is no partnership deed related to this interest on loan. Fine. So as per Partnership Act 1932's provision, we have to provide 6% interest per annum on loan. So compute interest payable by the firm to the partners, assuming the firm closes its books every year on 31st March. So this is our financial year, that is April to March, and loan has been provided on 1st October 2022. Total loan is rupees 30,000, which is to be split in the ratio 3:2 because this 30,000 is contributed by the partners in their profit sharing ratio. Solution 7. There is a total loan of rupees 30,000 and this 30,000 has been contributed by partners Sita and Geeta in their ratio 3:2. So how much goes to Sita? Sita has contributed rupees 30,000. Out of it, 3 by 5 is from Sita, and Geeta, out of 30,000 total loan, 2 by 5 is from her. So when we break it, we get rupees 18,000 and rupees 12,000. And these loans are provided on 1st October. 1st October. From 1st October to 31st of March. How many months are here? October, November, December, January, February, March. So 6 months interest is to be provided at the rate of 6% per annum because nothing has been stated in the partnership deed. So provisions of the Act suggests us 6% interest per annum. So interest on loan. Interest on loan for Sita is equal to 18,000 rupees on this 6% per annum, but only for 6 months. So rupees 540 is the interest which the firm will pay to partner Sita, and Geeta on the loan of rupees 12,000, 6% per annum for 6 months, and the amount is rupees 360. So this is how we have to calculate interest on loan. Question number 8. Bat and Ball are partners sharing profits in the ratio of 2:3 with capitals of rupees 1,20,000 and rupees 60,000 respectively. On 1st October 2022, BAT and BAL gave loans of rupees 2,40,000 and rupees 1,20,000 respectively to the firm. BAT had allowed the firm to use his property for business for a monthly rent of rupees 5,000. So here not only the partners have provided loan to the firm, but one of the partner, BAT, has also provided his personal property on rent to the firm for rupees 5,000 per month. Fine. So this rent is also a charge against profit. It is not appropriation or distribution of profit. It has to be charged in profit and loss account, not in profit and loss appropriation account. Fine. So loss for the year ended 31st March 2023 before rent and interest amounted to rupees 9,000. So before rent and interest is charged, there is already a loss of rupees 9,000 and we have to show distribution of profit or loss. So let us see the solution. Solution 8, we will see there are two partners and they are BAT and BAL and their profit sharing ratio is 2:3 and BAT has provided a loan of rupees 2,40,000 to the firm and BAL a sum of rupees 1,20,000. Both have provided this on 1st October 2022. So we have to calculate interest on loan. So interest on loan from 1st October 22 to 31st of March 2023 is how much? 6 months. So we have to calculate interest at the rate of 6% per annum only for 6 months for the period they have provided loan to the firm. So and interest on loan, let us calculate interest on loan for the partner BAT will be how much? On 2,40,000 at the rate of 6% per annum only for 6 months is rupees 7,200 and for BAL on rupees 1,20,000 loan at the rate of 6% per annum for 6 months, it will be just half of it because you can see by observation. So it has to be 3,600. So total interest on loan will be rupees 10,800 and it is a charge against profit. Fine. So charge against profit means irrespective of profit or loss, it is to be 100% charged in profit and loss account. Fine. So there is already a loss before interest and what is that? Before interest and rent. Okay. So it is 9,000 rupees loss. Fine. In this we have to deduct or add. Fine. Interest on loan. So it is already a minus figure. Then again we have to deduct 10,800 from it. Furthermore, there is a rent to be paid. At the rate of rupees 5,000 for the whole year, not for 6 months. Fine. 1st of October is the date for loan, but rent is to be paid for the whole year. So it is 60,000 rupees. Again we have to deduct. So the total loss has increased from 9,000 to rupees 79,800. So that this is the total loss. Now this will be paid to partners BAT and BAL in their profit sharing ratio 2:3. Fine. So let us see how much BAT and BAL will get. So BAT will get out of 79,800, BAT's portion will be 2/5, which is equal to rupees 31,920. And for the partner BAL, out of total loss of rupees 79,800, 3 by 5 portion will go to the partner, and the amount is 47,880. So this is the answer. Now let us see question number 9. Akhil, Sunil and Pravesh are partners sharing profits in the ratio of 3:2:1. Sunil had given loan to firm on 1st November 2022 of rupees 4 lakh. Interest payable was agreed at the rate of 12% per annum, and interest was paid by check up to February 2023 on 1st March 2023, and balance was yet to be paid. Pass the journal entries for interest on loan by partner. Now, in this question, we have to calculate interest on loan from 1st November 2022 to 31st of March 2023. That is for 5 months. November, December, January, February and March. For 5 months we have to calculate. Let us see the solution. So solution 9. There are 3 partners we are having. Which are those? Who are these people? Are Akhil, Sunil and Pravesh. Akhil, Sunil and Pravesh. And their profit sharing ratio is 3:2:1. And who has provided? Sunil has provided a loan. Sunil's loan. There is a loan of rupees 4 lakh on 1st November 2022. So from 1st November 2022 to 31st of March 2023, there is how much? 5 months. And we have to pay interest at the rate of 12% per annum. You see, mostly in rest of the questions, previous questions, we have charged interest on loan at the rate of 6% per annum, because the partnership deed did not contain any statement or any point related to this, and therefore the provision as prescribed in Partnership Act 1932 was applicable, which is 6% per annum interest on loan. But here in the partnership deed itself, it is written that 12% per annum interest will be paid on such loan. So we have to stick to this. So interest on loan is equal to, interest on Sunil's loan is equal to, on 4 lakh rupees at the rate of 12% per annum, but only for 5 months. So 5 by 12. And the interest is rupees 20,000. Okay. Now the question further says that out of this rupees 20,000, 5 months has been paid. Not 5 months, 4 months. Fine. So 4 months interest is equal to how much? Is equal to, out of 20,000 rupees, which is for 5 months, so we will divide it by 5, but we will multiply it by 4, and it is 16,000 rupees which is paid by check, and remaining 4,000 is still to be paid. But whether it is paid or not in cash, that is not the point. What is more important is that for the whole year we have to charge it against the profit. So we need to pass journal entry on which date? For 2023 on 31st of March, and it is interest on loan. Interest on loan account debited, which is 20,000 rupees, but out of this 20,000, by a check 16,000 rupees has been paid. For how many months? 4 months. And this interest on loan is for how many months? 5 months. And the remaining will be transferred to the loan account itself. Fine, as outstanding. So loan by partner Sunil for 1 month, that is 4,000 rupees. Being interest on loan for 5 months. And now on the same date, that is 31st of March, we will transfer this interest on loan entirely to profit and loss account because it is a charge against profit. So profit and loss account will be debited because it is an expense, rupees 20,000, and this will be credited and closed. So rupees 20,000. Accrual basis, है ना, being interest transferred to profit and loss account. So in this way, full interest on loan will be transferred to profit and loss account irrespective of whether it has been paid or not. Fine. So these are the journal entries for it. And I hope that you have liked the video, you have understood the concept, and therefore please do like it, subscribe it, and share it with your friends. And we will be studying the whole syllabus here. Each and every question from T.S. Grewal's textbook edition 2023 will be here available shortly in my channel HD Orion. Thank you so much for watching this video.